Is Jesse Durham. I teach people how to live and leave a lasting legacy, financially speaking and otherwise, through the infinite banking concept as conceived and codified by R. Nelson Nash. Let me mute that because I'm going to be monitoring the chat here. So what I want to do is be able to have a conversation about infinite banking. If you have questions about what is infinite banking, Jesse, who are you? What are you doing in the wide world? I'm going to tell you, but if you know that you already have questions about infinite banking because you are vetting this concept, you are looking into this idea for yourself, you want to know what it would look like for you to implement it into your household, your business, your investing, whatever it is that you're already doing, I'm here to have a conversation about that and to answer questions. So feel free to let me know who's here in the chat, where you're coming in from, and if it's in a replay, just know that if you put a question there, I will answer it. I do get to the comments. I do answer the questions myself. So in essence, the idea that I want to talk about is adding one step to what you're already conventionally doing. You're earning income, however it is that you are earning an income. And then most people, we are spending it on autos, housing, living expenses, and then maybe, and this is a big and a strong maybe, we're saving something, okay? So I'll go ahead and tell you, in his book, Nelson said that the average person is doing something like 20% of their income is going towards the autos, 30% of our income is going towards home or living, okay, our abode, rent, could be home, and 40% is going to living expenses at large, our charitable giving, the boats, the motorcycles, vacations, college educations, children, etc., and savings. Now, he gave a generous 10% going towards savings. So let's start right there. If we're not saving something of what we earn, if we just earn, get paid on Friday, and then we spend it all, we know that that's not going to get us anywhere. So if that's you and you work hard, okay, and I'd really love to speak to the blue-collared American patriots out there, okay, you're hardworking people. If you get to the end of the week, end of the month, end of a year, some milestone in life, and you realize I'm working too hard to not have more to show for it than I do, we've definitely got to start with saving some of what it is that we're earning. Okay, we're going to live, but we need to start saving some of what it is that we earn. Now, we can have a conversation about where it makes sense to save that, but let's just say, first of all, that we have to beat what Nelson in his book calls Parkinson's law. That's just the natural human tendency, actually, is to spend all that we earn. But once we decide, okay, I'm going to save, I want to live better, I want to create a lasting legacy, these are important things for me to create financial independence in the here and now, and I want my children, grandchildren, future generations to have a different launching pad than, say, maybe we did starting from scratch, then we have to save. There's an ideal place to save. What I'll tell you is that it's not going to be anything concerning investing. I'm not here to talk about investing. I'm here to talk about living and leaving a lasting legacy. That begins with saving. Saving some money where? That merits its own conversation. So if we could put money anywhere, what kind of features would we like that savings vehicle to experience? You know, if we take something very typical like a high yield savings account, that's some place where it's still pretty liquid, very liquid. We could get to it. It is going to have some growth. That growth will be taxed. And it's convenient. It's easy to get to a bank, high yield savings account, and do that, okay? There are many more advantages that we could have to where we decide to save once we decide to save, or where we decide to divert our savings if you're already a good saver. I have conversations with folks all the time They have all kinds of money under the mattress, in a high yield savings account. Maybe they're doing something a little next level, like putting some in CDs, so they're saving. But when they're exposed to this idea of infinite banking, we're realizing, of course, well, that's not the ideal place to be saving. So there are many more advantages in doing what's described in that book. So if you've not yet read that book, I'm going to encourage you to get a hold of this book called Becoming Your Own Banker. And I just got off the phone. Great young man, excellent young man, 4 or 5 years into his journey. If you're listening, you know who you are. Great conversation with this young man, 4 or 5 years in his journey, talking about, well, it's conventionally like this in the workplace. The guys are putting money in the 401k. We're working, 20, 30, 40 years in the career, hoping that things are going to happen with those investments, etc. But we're doing a lot of living now. We have business ideas now. We're getting married now. We're starting families now. We're launching this and launching that. And we want to travel and just different things. Had a great conversation there. And he was young and decided to step away from that conventional way of doing things. Closed out some government qualified plans. And this isn't advice. I'm not giving advice here. I'm just telling you what that conversation was a bit like. And decided to have more access, more liquidity, more utility more of his cash flow now, as young as he is and as intentionally as he is about starting a business and doing this with his family. And, I have this professional endeavor that I want to do, versus locking up money in an investment. But I was talking about savings, so let's get back to savings. There are, once you implement what's in this book, advantages to putting capital, saving capital in a policy. Now, when I say a policy, I am talking about a specifically designed whole life insurance policy from a mutual life insurance company that pays a dividend. Now, that's a robust clarification on what exactly I mean when I say whole life insurance, but we've all heard of life insurance, of course, but it does need to be specifically designed. It should be with a mutual life insurance company. It should be whole life insurance because it's an asset that you anticipate owning and using, okay? The idea is not just to have a car here, it's to get in the driver's seat and drive the car. And that policy should be from a mutual life insurance company that pays dividends. So right out of the gate right there are a lot of advantages to saving part of our capital, part of our income in that type of an asset. Right off the top of our heads, we could say, well, a life insurance policy is going to have a death benefit. So right out of the gate, do we not just instantly create a legacy move by having guaranteed whole life insurance? Now just remember, whole life insurance, because we're going to own it for our whole life. We're going to have a guaranteed death benefit for our whole life. This type of a policy is going to have a cash value for our whole life. We will stand to earn dividends for our whole life. So there are many guarantees to this type of an entity. So we'll have all of the advantages, let's say, of that high yield savings account that we were just talking about. So pivoting from doing something conventional like putting capital, putting money in a high yield savings account to be able to have a liquid, accessible place with some growth. So we're going to have a liquid access to capital, because you do. With a properly designed policy, you're going to have a significant access to liquidity, actually, because of this contract. This type of a contract actually guarantees you that for your whole life, you can reach out to the company and tell them 2 pieces of information to get access to a compounding pool of capital for your whole life again. Those 2 pieces of information, once they verify who you are, okay, in a phone or an email, is, okay, yes, you are Jesse Durham from North Carolina, is, well, Mr. Durham, how much of what's available do you want us to send to you? And do you want a check in the mail or a direct deposit to the bank account information that we have on file for you? And with those 2 pieces of information, we have access to a compounding liquid pool of capital for our whole lives. Now, that's a tax-free access to capital because you're going to be using the policy loan feature by owning this contract, the policy loan feature. So that's going to be a tax-free access to capital. Also, even while you leverage this contract via policy loans, okay, and get access to more capital via that policy loan, the compounding is not going to be interrupted on the contract, even though you have access to the compounding pool of capital. So that's so very different than the high yield savings account. If you have a high yield savings account and you withdraw some of the money that was in that account, you cannot continue to earn interest on that, of course. So not only is that a loss of interest that could have been otherwise earned, but it's certainly not going to be able to compound because of that interruption. And of course, any growth that you've experienced in a high yield savings account is taxed. And then, oh, by the way, since this is a whole life insurance policy, there's always at the end of the day that legacy move, that net worth move of the death benefit, which 100 out of 100 Americans do die, it turns out. Those are the current stats that we have. 100 out of 100 Americans die. So if we're using this type of an asset that's been designed for utilization as a superior savings vehicle, we get that compound growth. We get that death benefit. We're not asking permission. Permission is a high access to liquid capital. And then there are just so many other advantages. Well, because of that compound growth, doesn't that mean that we're creating a great hedge against inflation to where when we are putting $1 into such a policy today, that it can be creating multiple dollars in the future? Because that's exactly what happens. $1 of premium today can be creating $2 of premium in the future. And the longer you do that, the more efficient that the policy gets, to where you could be putting in the same dollar, because that's a guarantee actually of this type of a savings vehicle. If you decide to save capital in a policy, one of the guarantees actually is that the premium is guaranteed to stay level. So an insurance company with this type of a whole life insurance policy, the insurance company can never say, oh, well, now you're in your 60s, now you're in your 70s, now you're in your 80s, now you're in your 90s, now you're 100 years old, Jesse, you need to pay more premiums to be able to keep this kind of a contract. Nope. It's a level premium. That's a guarantee. And when you're putting in that same dollar of premium into the contract, it can be creating multiples in the future. So that's a tax-free growth. That's a growth that you can leverage, that you can have access to a compounding pool of capital because you're the owner of this policy. And the older that that policy is, the more efficient that it gets, the more that you use it, the way that I teach folks how to use it, the more multiples that your $1 can create in the future. Now, when I say about how to use this, I would encourage you, if you've not yet seen my full introductory, it's a comprehensive introduction to this infinite banking concept. It's the main video on my YouTube channel, or you can find it directly at my website, durhamtalents.com, that I would encourage you to check that out. What I'm doing right here now is having a conversation and sharing some best practices. I'm going to get to some questions as well. But the concept is you can live and leave a lasting legacy by creating a private family banking system, by building a system, acquiring, owning, purchasing whole life insurance policies from mutual companies that pay dividends. Oh man, we didn't even talk about the dividends a second ago. You know, when you're putting more capital, more money into those high yield savings account at a bank, you know, do you know? You don't know if you've never thought about this. Maybe you've never thought about this. If you're aware of infinite banking, you probably have, but still, someone owns the banks. But it's not you, it's not me. We don't own those banks. We don't own those credit unions in town where we may have some money in these high yield savings account because we do decide to save for the future. That bank is profitable, but it's only the owners of that bank that get to enjoy dividends. Well, when you are a policy owner with mutual life insurance companies, you're part owner of that company. And that means that you get to mutually enjoy the profitability of that company. So the companies that I personally own policies with, the companies that I professionally write policies, build policies, construct and design policies for my clients, the companies that I use for that have all been profitable for a minimum of 100 consecutive years. Now just think about the history that's taken place over the past 100 plus years. Well, not only have these insurance companies been able to provide through their policies all of the death benefits that they've paid out, because remember, whole life insurance, it's not an if scenario, it's a when scenario. When you own a policy, a whole life policy, there's going to be a death benefit paid. Not only have they done that, not only have they provided that compounding pool of capital because of the cash value of your policy, but every year the companies have been profitable. They've made good business decisions and choices. And we get to share as policy owners in the profitability of these insurance companies. So it's the ideal way to create a legacy move, implementing this infinite banking concept. It's the ideal way to, and a superior way to save money. But I'd like to talk about what it is not. I have some questions that folks have recently, and this is from social media, this is from private consultation calls, this is from one-on-one interactions, this is from group interactions. So I'm easy to find. You can find me at durhamtalents.com. Of course, you're seeing this on YouTube. Feel free to check out the channel. I have many series on my channel. I have created an absolute library of content, close to 1,000 videos on the myths, mysteries, and misconceptions around whole life insurance, what it is, what it isn't, the infinite banking concept, what it is, what it isn't. I would encourage you to check out my myths, mysteries, and misconceptions series on my YouTube channel. If you're saying, well, Jesse, and I was just on a phone call with a gentleman saying, but Dave Ramsey says this, Susie Orman says that, my brother-in-law says this, the guy that I work with says that. Check out that particular series to learn more about what infinite banking is or is not, what whole life insurance is or is not. I've got an encyclomedia series where I talk about the vernacular of whole life insurance for the purpose of implementing infinite banking. I've got interviews, I've got a question and answer series. There's lots of series that you can dive in on to particularly find a theme or a category that you want more information about. And then once you do, and you get your learning curve sped up and you'd like to have a private one-on-one consultation call with me, you can make that happen at durhamtalents.com. So one of my questions that I'd like to field today in this live, and again, you put your questions in the chat. I will come back to these live or in the replay. I was asked, how would you recommend today? I was asked this question. How would you recommend that I share this concept with friends and family? I look at this concept, which is so very out of the box, which is, it's financially like unplugging from the matrix, okay? Everybody's plugged into the matrix. I go to work, I work hard, I contribute to these government qualified plans for my kids' college, for my retirement. I finance everything with the bank, through the bank, and I'm just living my life, okay? Well, when you unplug from that conventional financial matrix that's building a lot of other people's dreams, and you decide that you want to have financial independence for yourself through infinite banking, it's different, okay? We're not taught this at school. We're not taught this at work. We're not taught this at church. You are implementing this concept. You have learned about this concept. So I say it's much like letting somebody watch a movie for the first time. Now, you can use whatever you want to use. So when I say watch the movie, you could share my presentation video. If you're one of my clients or you find that video useful, you can share the video with folks and they're either open to watching that or not. It takes less time to watch how I took my family from tens of thousands of dollars in debt to creating a private family banking system over the past 10 years of implementing the concept for ourselves. And now, of course, helping people all across the country do the exact same thing. It takes less time to watch that presentation video where I share that experience than it does to watch a Marvel movie. What about this book? I mean, you see this book. This is a thin book, large print, big illustrations. It's a quick read, but it's an absolute paradigm shifting book. Will they or will they not do that? I believe that we just need to provide people with information. I look at it a lot like the gospel. Okay, it's a seed. The seed needs to go to the ground. I don't know if the ground's going to be dried up from the sun. I don't know if the ground where the seed lands is the bird's going to land and eat the seed. I don't know. I don't know. That's not my part. My part is when I first saw infinite banking, and I recently shared this on an interview that I gave to the Money Advantage podcast, fantastic podcast by Rachel Marshall and Bruce Wayner, and I shared my story there. I could put that in the comment section, the show notes, if you would be interested in seeing that. They're great. Give them a follow, look them up. They're doing awesome things in the space. But I talked about what it was like for me. I looked at discovering this infinite banking concept much like unplugging from the matrix and getting away from that conventional route of finance where we're locking up a significant portion of our income in government qualified plans for 20, 30, 40 years, and we're financing everything the conventional way. Literally, we're bleeding out interest dollars to these commercial banks where they're making money off of our money. We deposit our money there, and then they're making money off of that money and then charging us interest when we come to them for loans. I was trying to say you could check out that interview where I share my background. So feel free to do that. But I want to get the information to people so that they can make their choice. So getting folks the book, and by getting it to them, I would encourage this. Don't give somebody the book. Tell them to go get it for themselves. All right? You could give somebody, and it's so valuable. I mean, the thing that comes to mind to me is, if you put these two side by side, $100 and the book, most people are going to think that the $100 is the more valuable of the two. And monetarily, that's true, actually. The book is like a fourth of what this is. It's like 20 bucks, 25 bucks, something like that, okay? But here's what I'm telling you. Mentally and pragmatically, if someone implements this concept, this is barely worthwhile to be a bookmark, meaning that the more valuable of the two is the book. But again, I know that, you may know that, but folks have to figure that out for themselves. So my suggestion is to let folks watch a presentation video for themselves, and then hopefully that will encourage them to read the book from the guy who came up with the concept for themselves. This isn't my idea. This isn't my book. And there have been lots of other great people that have written books about infinite banking since Nelson. But he's the guy who came up with the concept and wrote the book about it. So that would be my suggestion. I had a great question about that earlier. That's my suggestion, and that's what I've actually done myself. Let people buy the book for themselves, let them watch the video for themselves, and then have quality conversations. That was actually a follow-up question that the gentleman asked me that I was just on the phone with, was about cultivating a group of like-minded people around him. And that's actually a suggestion in Nelson's book, is to create a mastermind, create a community, create a small group of folks where you could talk about what you're reading, talk about money. You can't talk about money. For some reason, it was a very taboo growing up. For me, I know. And I'm pretty sure that it still is based on conversations that I have with folks all the time in private consultation calls. But for those of us that are looking to build out this concept into a multi-generational, okay, and on that point, I've got a video on my channel that comes to mind. I've done a life lessons series. So this is for the folks that, you're already clients. You've already implemented this concept. If you've not yet seen my life lesson, it's my number one life lesson. I've done a series where I talk to business owners, where I talk about using infinite banking for vacations, where use infinite banking for real estate business, real estate investing, etc. Legacy. The number one video that I did in that particular series was on legacy. Thankfully, I have clients and friends in this space who have implemented this concept spanning 3 and even 4 generations, a complete financial dynasty within that family. Incredible stuff. A lot of that I've covered in my interview series. I've done an interview series. There's a particular episode with Miss Robin Washington. You could check that one out. Incredible what she's implemented. But that life lesson on legacy, I would encourage you to check that out, because if you're like me and you've already started this journey of infinite banking, you're probably the generation that's launched this brand new paradigm, reacquiring that banking process for yourself using this product. You see how I'm starting to pull things together here? New paradigm, the banking process, using this type of a product for yourself. And you're the one that's creating it. You're the one that's laying the foundation. You're the one that's actually beginning to live and leave a lasting legacy. You're living out this concept in your life. So, of course, you want to share it with others. That's what I would encourage you to do. And then as a follow-up, remember, not everybody gets it right away. Nelson even talks about a gentleman who never implemented the concept himself, but who later came to Nelson, and it's the playing out of a principle in this book. It's called the Golden Rule. He who has the gold makes the rules. Well, there came a time where Nelson had the capital, he had the gold, so he was able to make the rules, meaning Nelson says that when you have money, opportunities will hunt you down. And that's exactly what happened in this case. The gentleman himself had not implemented infinite banking personally, but he did know that Nelson was open to doing business, was open to lending money. And because Nelson had the capital to do the lending, he was in a position to capitalize on an opportunity. Okay? And that's just a mutually beneficial opportunity that happens. But what it is it's privatizing that instead of commercializing that with the commercial banks, where the money system is being inflated anyway. But I digress, unless you want to have that conversation. And if you do, then we can go there. But what I'm trying to describe is how to create your own financial fortress through the infinite banking concept for you and your family, and answer some questions along the way and have a conversation. Another question that I was asked, do you do live events? Do you do workshops? Do you have some form of a subscription? It just what all do you do? So let me address that. I have one-on-one private consultation calls with clients and prospective clients to teach this infinite banking concept to help you keep more of what you earn. Okay, the average American is bleeding out 34.5 cents, about a third of every dollar that we earn. The average American is bleeding that out, okay, on the cars, on the homes, on the vacation, on everything, okay? That's what's happening. I help people keep more of what they earn by directly working with my clients. Me and you having phone calls. Earlier today, had a consultation call with a client that's been a client for 1 year this week, celebrating a year of owning his very first policy. Married, 2 kids, great income, recently went on a trip. That was awesome. I got to hear about how he used his policy, leveraged the policy to get a policy loan, take the family on a trip to Europe. Awesome. And we talked about, okay, what that looks like to go ahead and get positioned for the next time that we want access to capital for investments, business, lifestyle, the next trip, whatever it happens to be. Okay, so the beauty here is that the policy continues to grow even when we leverage it to have access to capital for vacations. And then if we just simply do what we otherwise would have done, if we then will simply from our income build more capital back in the policy to refill that reservoir and or just continue to pay additional premium, then there's going to be, and if we do it just like we would have done if we'd have paid cash or credit, okay, put that back in there for the next trip, okay, save up for the next trip. Doesn't that mean that over time you'll be able to take bigger trips, longer trips, better trips, more trips? I mean, just it gets better and better the more that you do it. So I had a great consultation call. So I work directly with my clients. I put out a lot of my best practices on the YouTube channel. Again, I've got many series where I'm covering the themes, where I'm going topic by topic to be as helpful as I can to share the best practices that I've acquired over the past 10 years of purposely implementing the concept myself. I do webinars. I do family meetings. I have spoken live and I'm open to doing that. I do a lot for clients and for prospective clients. The most important thing, of course, is to just, if you've not yet started, you're vetting the concept, you need to watch my full introductory presentation on the concept. I can't encourage you enough to get into the book as soon as possible to vet the original source material for yourself, and then to book a free private consultation call so we can talk about what it would look like for you to implement infinite banking, what it would look like for you to be able to keep more of what you earn instead of bleeding out your capital, bleeding out your money like the average. I mean, I was looking today. I'll give you some stats. I'll run some stats. I'm going to be putting this into an evergreen piece of content, and I'll just be reading off of paper the notes that I have. The average debt is $63,000. And that's with an average income in my state, of $80,000. It's incredible where we're at. $1,700 mortgages, $750 average car payments, and that's just for one car. Don't most homes have two? Okay, $1,500 a month just on cars. So I don't care whether you have a $500 a month car payment or a $1,500 a month car payment. My question is this: if you could keep all the money that you'd ever spend on cars, and then all the money that money can earn an interest by letting it compound for the rest of your whole life. And then if you could capture the interest that you would otherwise be paying someone, are you seeing what I'm saying here? See, that's what a policy allows us to do. Owning a whole life insurance policy gives us a place to put principal, allows us to earn uninterrupted compound growth. And then if we leverage this system via policy loans to go out and do the things that we were going to do anyway, like finance cars, okay, we go out and finance cars from the policy, and then we pay that back to ourselves via this policy that we own, plus the interest that we otherwise would have paid somebody. Do you see how that's just privatizing and we're keeping the principal? And that principal continues to provide a value for us for our whole life. The interest that money earns, the interest of finance. And then, again, we haven't even talked about dividends. The policies allow us to earn dividends as well. So there are just several ways that grow a policy once you own one. And of course, the most important is just how you use it. How you use it. If you become your own banker. You keep all of that 30, 35, 34, 35 was that average, okay? Instead of ripping your money up, instead of bleeding that interest out, you could be keeping all of that. That's what I'm trying to say. My name is Jesse Durham. I help people live and leave a lasting legacy through infinite banking. I appreciate you being here for me to be able to answer a couple of questions about infinite banking, to be able to describe more about what it looks like to live and leave a lasting legacy through infinite banking, what it is to buy whole life insurance from mutual companies that pay dividends on purpose, to pay a premium there, to build up a cash value that you can leverage, to go out and do the things that you are going to do with money anyway. I know we're going to get cars anyway. I know we're going to take vacations. I know we're going to pay property taxes. I know we're going to run our businesses. I know we want to pay for our kids' weddings and send them to college. We want to do these things. Infinite banking is just adding one step. Instead of doing things the credit way, where you're asking somebody else for permission to use their money on their terms and conditions, if they approve you to pay them interest. And oh yeah, by the way, they're going to hold collateral over your head. Don't make the car payment, they'll take the car back. Don't make the mortgage payment, see how long you continue to own the home, right? Or the cash method, where you save up the money and you liquidate it to pay for the thing, and it's gone forever. There's a third method of finance. It's not credit, it's not cash, it's compounding. Every dollar of premium that I've ever paid over the last 10 years is still creating more dollars for me today and for every day in the future for the rest of my whole life. I hope that this has been helpful. You can reach me at durhamtalents.com. My hope is that you live and leave a lasting legacy.